By performing a cost segregation study and utilizing the real estate professional status, we were able to save them $33,600. Hey everyone, I'm Gabe Velez, partner at Tehrani Velez, and I'm excited to share an example of how we helped a real client save real money on taxes. We specialize in working with business owners to optimize their accounting while minimizing their tax burden. Let's get started by understanding the issues. First, the tax code. It's complicated, constantly changing, and frankly, it's a lot to keep up with. Second, as an entrepreneur, you're focused on reaching the right audience and delivering a great client experience. No one gets into business because they love keeping up with tax and legal compliance. And finally, the reality is because of 1 and 2, most businesses are overpaying in taxes. At Tehrani Velez, we've been serving businesses with revenues between $1 million and $50 million since 2010. We're certified public accountants based out of Irvine, California, and our specialty is tax planning for growing businesses. Here's a case study from one of our clients who was a married couple filing joint with the primary taxpayer working as an executive for a mid-sized company, earning $500,000 on a W-2. The spouse was working less than part-time, and together they owned and managed several rental properties. By performing a cost segregation study and utilizing the real estate professional status, we were able to save them $33,600. So why did this strategy work? First, the cost segregation study. What a cost segregation study does is it allocates cost basis to the different components of real property. Where the IRS depreciates residential real estate over 27 and a half years on a straight line basis, land improvements such as driveways, hardscaping, and fences are given a 15-year life. Then you also have the 5-year property like carpets, blinds, and appliances. These shorter useful life provide you with a faster way to write off your initial investment. Furthermore, assets with useful life that have less than 20 years are eligible for what's called federal bonus depreciation, which depending on the year that the asset was placed in service, can be as much as 100% write-off in 1 year. Next, real estate professional status, or REPS for short. Chances are when you do a cost segregation study that you're going to generate a loss on that rental activity. The problem is that the IRS looks at rental properties as inherently passive, and they don't want to allow you to offset those losses against active income. One notable exception to that rule is to the passive rule is the real estate professional status. The 2 biggest tests to be reps are number 1, devote 750 hours or more per year to managing, leasing, improving rental properties, and more importantly, number 2, spend more time on real estate than any other activity. In this case, this works because the spouse passes both tests. And if the spouse had a full-time job, the IRS would never accept that they were able to spend more time on real estate than on their real job. So let's walk through what our comprehensive tax planning process looks like. First, we start with an initial assessment where we analyze the client's prior year tax returns or their projected current year income. This helps us get a clear picture of their current situation. The assessment also involves doing an intake survey. Here, we dig into the client's long-term and short-term goals, and we assess their level of experience and understanding with tax planning. Once we have that information, we move on to drafting a customized tax plan. A tax plan typically includes 5 to 15 strategies, some simple, other more complex. Each strategy is tailored to the client's specific needs and goals. We don't just stop there. We also provide an analysis of estimated tax savings, a description of the complexity of each of the strategies, and how each one will affect the client's global cash flow. Some strategies require the client to invest money upfront, while others simply involve taking advantage of tax credits and proper structuring under the tax code. Finally, we give the client clear action items. This is the who, what, and when of actually executing on those strategies and realizing those tax savings. This ensures that they can follow through and get the savings that they deserve. We can also monitor the plan and help with implementation to make sure everything stays on track. whether it's our office, the client, or third parties. And as new tax laws come into play, we provide ongoing support and updates to keep the client ahead of the game. So let's get started today. We start with a free 15-minute intro call, followed by our intake assessment, and then we do a free 1-hour initial consultation to discuss recommendations and define a scope of work. And at that point, there are still no obligations. Use the QR code on the screen to book your intro call today.